Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's get started. We have our two experts joining in. Ashu Madan joins in on the fundamentals, and Prakash Gaba is here with us to tell us about the technicals of trade. So, gentlemen, good afternoon to both of you. Our first query comes in on VIP. We have Akanksha Mishra, who's written to us from Mumbai. She holds 200 shares of VIP Industries at 132 odd rupees. She's been holding on for a year. She's a long-term investor and wants to know whether to hold or to sell. So, Akanksha, you're making what, 70 odd thousand rupees in terms of profit. So congratulations. Ashu, let me come to you first. And this numbers came out earlier this afternoon, and across the board, I mean, whatever way you cut it, it's looking good. So what's the call for somebody who's already making money? Is it good for more?
Yeah, certainly it looks like. I mean, if you look at India's organized trade industry is growing, I mean, at a healthy pace. That's very important. Rising disposable income, increasing women workforce, tourism, everything put together. I mean, suddenly you would see there has been a shift of mindset of the people to shift to the quality product. So I think one is that. Secondly, when you look at the track record, last 3 years have been impressive with revenue and tax growth of 11% and 43% respectively. So I think with healthy industry prospects and company initiatives, I expect that this company will continue to do well, and one should certainly hold the stock. I mean, irrespective of any level or dip in these gaps, which is coming. So, with a long-term perspective or medium to long-term, I feel very positive about the stock, and one should continue to hold.
All right, positive about this stock. One should continue to hold this. Ashu, you know, it's trading at 40 times ahead of numbers at a record high. Now, after this up move of close to around 8%, trading around that 43 times, but growth prospects are strong. Prakash, this stock ahead of every result is at a record high. Post results moves only higher and currently is sitting at yet another record high.
It's a positive structure. Sees a correction, gets over, consumes the correction, and it goes up. It's 532 now VIP. I think it's heading up to around 600 zones, matter of time. In fact, if you get dips, those are buying opportunities. So hold and a buy.
All right, hold and a buy as far as VIP is concerned. In the meanwhile, we'll just try to slip in this one. Juhika Desai, writing to us from Mumbai, wants to invest 20,000 rupees in Berger Paints for the long term, wants to know whether it's the right time to enter or not. Prakash, in 30 seconds, should you use Berger Paints to paint your portfolio?
Of course, Berger Paints is a stock that is a long-term hold. Certainly, if you get dips, it's a buying opportunity. You want to buy around 300 zones, add it, and just relax. You got to paint your color red.
All right. Ashu, you want to come in on that? Ashu? Right, I think.
Yeah, certainly. Hello?
Yeah, go ahead. Berger Paints.
Yes, certainly. I said 2017-18 was a challenging year for the industry. However, with the recent rationalization in the GST rates and the revival in the rural and urban demand, I mean, I would think that company would continue to do better, and the effort towards brand building and distribution expansion, everything put together, I would certainly reckon to hold the stock, and definitely, very positive on the stock.
All right, let's continue this theme, but talk about numbers then. Marico has posted a slightly muted set of earnings this time. Volumes were in line within the expected range of 10 to 12 odd percent. Their gross margins, however, have declined by 500 odd basis points this time around. Saugata Gupta, the MD and CEO of Marico, now joins in. Mr. Gupta, good afternoon. Thanks much for joining in. What's been the price growth in the parachute rigids this quarter? Was it not enough to cover the entire increase in input costs?
So if you look at copra overall input cost increased by around 70%. On an annualized basis, it would have been 40 to 50%, but we decided not to take the full price increases. So our price increase would have been in the region of around 28%, as against a 70% increase in input costs.
So that is why the margins have come down. So the copra prices, which you said moved about 40% higher year on year in the first quarter, have they begun to cool off so far in the second quarter? What's the movement been like?
So if you look at sequentially, there has always started, copra prices have started falling, and we believe that in terms of this will, especially in the second half of the year, we will begin to lap up some margins.
Okay, second half of the year, you'll begin to lap up some margins. So is the worst of margin contraction over then?
No, so I think the significant margin contraction which has happened because of the fact that there has been significant input costs increases, and we wanted to ensure that we continue to maximize volumes. So I think in the second half of the year, definitely given the input cost visibility which we have on copra, we believe that we'll be able to recover some lost margins which has happened in the last quarters.
Okay, so how does the remainder of the year then look in terms of raw material prices, volume growth?
I think it's very too early to say that. As I said, our endeavor will be to ensure that we continue to maximize volume growth. We'll be very happy if we can deliver 8 to 10% and definitely a double-digit volume growth for the year.
Okay, let's talk about Saffola then. That one's grown about 10% on a week base. Are you confident about this growth for real?
Saffola, we had the 2 or 3 issues we had to solve for the brand. I think we are halfway there, but definitely by the second half of the year, we should be back on track. As I said, that some of the solutions are in hand, some of the things which we are solving over the next 3 to 4 months.
Okay, so what's the kind of growth that you expect in the international business?
So if you look at it, I think MENA is now chugging along well. We have now had a couple of quarters of double-digit constant currency growth. We'll be able to maintain that growth trend. Vietnam was a drag. I think we now are in, we know now what the solve which has been done in terms of the go-to-market and other initiatives. I have an extremely high confidence level in Vietnam getting back into double-digit growth over the balance year. And there is no reason to believe that international business will not be able to deliver constant currency double-digit growth for the balance 3 quarters.
All right. And in the food business, Saugata, what's the opportunity that you see out there? There's a lot that you guys are trying to do. How big do you think it can be in the next 2-3 years?
So I think food business last quarter grew around 20% plus 20, I think 23%. And I believe that food business has to, the first port of call is to get into a 200 crore level by next year. And then if we, because that gives us a certain kind of a profitability in the food business. And then we have to explore other categories to get it. Our ambition is to develop over the next 3-4 years, a 500 crore food business.
Okay. Mr. I have a general interest question. Are you going to bring Beardo to offline channels, and what's the growth rate that you foresee in the youth portfolio?
So the youth portfolio has done, I think it's been delivered a fantastic performance. We have delivered 44% growth in the male grooming and 50% plus 60% growth in the serums, which is the premium nourishment. We believe that, I think we struggled a bit on the youth portfolio after the acquisition, but I now believe that both the categories are at a point of inflection. Even the price point brand on Dio is doing extremely well. And there is a certain degree of certainty, I would say, that in terms of the youth portfolio delivering 20% plus steady value growth over the next couple of years. As opposed to, I think Beardo we'll continue to maintain Beardo in specialty channels like e-com and a little bit of salon and maybe a little bit of modern trade. The uniqueness and the differentiation is maintained if you have a digital brand as opposed to a brick and mortar brand, and we want to maintain that kind of a differentiation.
All right, so all the beard lovers will have to order Beardo online itself. Definitely not me or anyone here. When will you ramp up your ad spends to normalized levels of 10%, Saugata? This quarter it was just about 8.5%?
Yes, it will get back to 10%. At the same time, we have had a significant initiatives on efficiency in terms of both above the line and below the line spends, and the results are fantastic. So even if we maintain at 10%, I think there'll be a 20% incremental impact.
So 340 points higher on the Sensex, and the Nifty Bank, that's now seeing a 1% rise, so 280 points added over there. Let's get back to answering the stock queries. Ashu, Madan and Prakash Gaba, 2 experts are with us this afternoon. So the next query comes in on Titan. Anjali Takral has written to us from Mumbai. She holds 5,000 shares of Titan at 650. She's been holding on for a year. She's a medium-term investor and wants to do what she should do. So closing in on Titan, numbers are due today, and she's making a profit of what? Almost 14 lakhs.
14 lakhs. She much rather buy some jewelry.
Ashu, do you even want to answer this question?
Yes, certainly. I think, the best thing about Titan recently is it has had its share of correction also. Whatever small correction because of the mid-cap correction or the overall correction in the stock, it has withered that storm also, and it is standing stable. Other than if you talk about the fundamentals, I think the organized player, people shifting to organized buying in jewelry, though, I mean, overall jewelry is little down, but still an organized player beneficiary of, I mean, the organized market. So I think everything put together, and the most heartening, as I said, is that it has rebounded from the correction which has recently happened in the stock. It was not very deep or not very severe. So I think that is very encouraging. So I would say that, I mean, the way the market is shaping up, I mean, a lot of money is chasing select stocks, and Titan is also one of the beneficiaries of that. So everything put together, I would say that certainly buy, hold, and keep it for some more time.
All right, buy, hold, and keep it for some time. In fact, I'd like Prakash to give his view on Titan as well. It's not the FMCG company which is going into its results with a record high. Not much is expected because the company also spoke in their quarterly updates that the first quarter wasn't all that great. Charts-wise, how does Titan look to you, Prakash?
Basic structure positive.
Of, I mean, the organized market. So I think everything put together, and the most heartening, as I said, is that it has rebounded from the correction which has recently happened in the stock. It was not very deep or not very severe. So I think that is very encouraging. So I would say that, I mean, the way the market is shaping up, I mean, a lot of money is chasing select stocks, and Titan is also one of the beneficiaries of that. So everything put together, I would say that certainly buy, hold, and keep it for some more time.
All right, buy, hold, and keep it for some time. In fact, I'd like Prakash to give his view on Titan as well. It's not the FMCG company which is going into its results with a record high. Not much is expected because the company also spoke in their quarterly updates that the first quarter wasn't all that great. Charts-wise, how does Titan look to you, Prakash?
Basic structure positive. Corrections are there. It's getting over. It's getting consumed. So I would say that though nothing much is expected, but still it's up. I think it's heading to levels closer to 1,000 zones and maybe beyond that. Looks like thousands on the cards. Hold on. Continue holding it.
All right, continue holding it. You're making a fair amount of money and there is no reason why you shouldn't hold it. That's the view from the experts. The next one, Miss Nitya Sriraman writes to us from Chennai, holds 26 shares of Nestle India at 6,883 rupees for the last 11 months. Long-term investor wants to know whether to hold or sell. Well, thankfully, all our viewers so far have been making money. And Ashu, Nestle, 10,000 rupees, now 10,750. Again, due with numbers. But it also trades at the premium to the sector, close to around 54 times FY20 earnings.
See, reason being, I mean, the kind of premium it is generating it is maintaining a leadership position in, I mean, majority of its brands, and they're performing well across segments. So also now in focus would be innovation and increasing volume share in its core brands. So it has a strong revenue stream, and I mean, the consistency is the key. So, and return ratios, if you compare to other FMG companies, is certainly better. So I think this trend, which is, I mean, this premium demanding trend would continue in the near future also. So I would certainly advise that stock which is delivering healthy returns.
Right.
I mean,
Ashu, allow me to interrupt you. I think we have Titan's numbers that have come in. It's looking decent, actually. So I have the press release as well with me. In terms of PBT, they've seen a 31% rise. The sales income, they say, have grown to about 4,000 odd crores. In terms of jewelry division, the income growth over there is 5.6%, which is coming at 3,572 odd crores. The watches business has grown from 517.
Right, so the big beat has come in from the EBITDA. Titan's EBITDA should come up for you on the screen. 494 crores is where the EBITDA has come in. We were working with a number of 463 crores. The revenue has grown, but the EBITDA has grown much faster. So that is what explains the sort of up move that we're seeing on the stock right now. Remember, it was off the record high. Trying to take a look at the segmental growth as well. Jewelry segment has come in at 3,571 crores. That compares with about 3,380 crores. A little bit of a growth there, and not too much. The company had alluded to us already that the jewelry business will not do too well. However, the EBITDA for Titan has been fairly strong. Even the EBIT in the jewelry segment has come in at 393 crores. This compares with 338 crores. The watches business has also shown a sharp improvement in their EBIT, 111 crores versus 48 crores. So that is what explains the sort of beat that has come in. Jewelry segment absolutely in line, a tad bit better if you must on the margin front. But watches, the EBIT out there is 111 crores. That compares with 48 crores, and that is what explains the big beat that we're seeing in the margins.
All right, so looking good. Ashu, you want to quickly comment on the numbers?
No, certainly I think it is in line with the overall concept, as I was saying, that jewelry could be under pressure and overall they're doing well. So I think everything put together, and they're good numbers, and it will continue to perform well.
All right, Ashu, a view on the valuations for Titan, because even if it's off its record high, still currently trading at around 43, 44 times 2-year forward earnings. Do you think it is completely priced in, or there's more to go?
See, the problem is that there is no thumb rule for these valuations, because as I said, once you are and it is liquidity and they are chasing select stocks. So I think which are those select stocks? And the answer is Titan one of them. So if the answer is yes, then certainly. So I think not just for Titan, but many other stocks across sectors, you will find that they are outperforming, or they are the only ones who are continue to perform, because we have seen so many. There is no takers for governance issues. There are no takers for any kind of hassle arising in the market related to the company. So I think this phenomena of money liquidity chasing select stocks who are good stocks will continue, and you'll see. Beneficiaries. Titan like stocks would be a beneficiary of that.
All right, some comments coming in from Bhaskar Bhatt, the MD. He says that despite the single-digit revenue growth in the jewelry business, the profits have grown, and the company has now put together plans to stimulate demand for all the product categories through innovative advertising campaigns and new product launches in the coming quarters. So that's something to look out for as well. They're saying that the soft patch that was seen in Q1 was because of the decline in gold imports by 39%. So that was one of the factors as well that played out through the quarter. Any closing comments?
Right, Sumaya, so it is an operationally strong performance, but we need to know where it has come from. It has come in from the watches segment. Out there, the EBIT has grown by 128%. The EBIT margins for the watch division have come in at around 18.7%. That compares with close to around 9.5%. So out there, the EBIT has increased. Jewelry segment, as the management themselves said, 6% growth out there. We were expecting anywhere between 8 to 10%. So that's a bit disappointing, but okay, it's come on a huge base of 54%. So something that the street will be willing to ignore, given the stock is off record highs. The expansion in margins of the jewelry business has been good, about 100 basis points expansion out there, 11% as against 10%. So that's a positive. But the biggest positive is the up move that we've seen in the company's watch division EBITDA. Need to know whether this sustains or not. And the stock price is up about 1%. He spoke about a couple of new product launches. I saw their Gulnaz collection lately. They've been advertising all over the city. Looks pretty good.
I have a lot of things to say to that, but I think I'm going to just reserve my opinion for now. But, it's a good performance also, because I remember not so long ago there were calls from certain quarters for them to, perhaps hive off their watches business or shut it down, separated basically from the jewelry business. So I suppose this in some way at least answers some of the critics. Additionally, they have continued with their retail expansion. So 27 new stores have been added, which takes their tally now to 15-20 stores across the board.
That's actually the bigger positive, because if you're constantly adding stores, it's only because you see that sort of visibility coming in. So sum and substance again, Titan's EBITDA has beat estimates. That's all. That's because of the watch division, which has outperformed. With that, all right, time to raise the bat for the Nifty. A century, 101 runs today, closing in on that 11,350 mark as we speak, and leading it higher are a couple of these FMCG stocks. HUL should come for you at the high point of the day. ITC, that one too has led the Nifty towards the higher end of today's trading range with that up move. Titan's numbers on your screen. The EBITDA looks good because the watch division doing well. Jewelry revenues growing just about 6%, a tad bit below expectations. Just before we wrap, a quick query. We have Monica Deshpande writing to us from Mumbai, holds 45 shares of Wipro, 274 rupees for the last 2.5 months. Long-term investor wants to know whether to hold or sell. Prakash, a view on Wipro.
Wow, what a stock. Beautiful up move. I think it's on a higher time frame basis, tells me it's still up. 531, I think it's going to 600. Matter of time. You've held for a long time. Hold for continue holding it. No
all right.
Buy dips.
Thanks a lot, Prakash and Ashu, for joining us and answering all the queries. Hold Wipro for the long term. With that, we wrap up on your stocks. Stay tuned to CNBC TV18. Closing bell comes up next.